Chris Roberts here, and welcome to the Ultimate Guide to Investing in Multifamily Apartment Syndications, Module 3. How to find real estate syndication deals and understand your options. Once you get wind of real estate syndications and you begin thinking about possibly investing in them, it's natural to simultaneously have tons of questions. Investing in real estate is a big deal, and you should have all your questions answered. Furthermore, real estate syndications aren't broadly popularized. So not only will your friends probably not have the answers to your questions, but they'll likely have no idea what you're even talking about. For this exact reason, it's important to find a trusted, knowledgeable resource to get your questions answered and do plenty of your own research. In an attempt to make this easy for you, we've addressed 4 big questions today. Number 1, what type of properties can I invest in using syndications? Number 2, what risky downsides are there to syndications? Number 3, where and how do I find syndication deals? And number 4, can I invest in syndications online? The answer to these 4 simple questions are going to clarify so much for you. We can feel it. Ready? Let's dive in. What are the different types of real estate syndications? Real estate syndication deals are available on multifamily properties, self-storage, manufactured home parks, land development, hotels, student housing, warehouses, and much more. Some real estate syndications are for ground-up construction, while others are for buy and hold, i.e., buy an asset that's already stabilized and hold it for a number of years. A great example of a value-add multifamily deal in an apartment community whose units haven't been updated in 10 years. The kitchens are outdated, the carpets are worn, and the landscaping needs some work. By making those improvements, we can increase the rents, which increases the income of the property and thus the overall value. What are the risks of investing in real estate syndications? You're no dummy. You already know that any type of investing is risky. Syndications aren't immune to this risk either. One of the biggest risks lies in the execution of the business plan. Before the deal, you're wooed with glossy marketing packages and sponsors that will answer questions with lofty ideals. However, when the rubber meets the road, the sponsor team really needs to be able to execute the business plan in the face of unforeseen circumstances. Investing with sponsors who have a proven track record and whose priority is capital preservation helps ensure that they will protect your investments and do what they say. Changing markets and economic conditions are always a risk. No one can predict what market conditions will be like at the end of a project's hold time. This means if the projected hold time is 5 years, check to make sure that the loan term is for at least that long, and that ideally it's longer than 5 years, so there's a buffer in case sponsors need to hold the property longer than intended. At the end of the day, as a limited partner passive investor, you're concerned with your personal liability. The good news is, your liability in real estate syndications is limited, at worst. You can lose your original investment of capital, but you cannot lose more than that. You can't lose your house, for example. Where can I find a real estate syndication opportunity? The only publicly advertised real estate syndication deals are for accredited investors only. So how does a normal person find a real estate syndication deal? You can do a Google search, but how do you know that the opportunity that pops up is going to be a legitimate one, put together by experienced teams with a strong track record who safeguard your money over a period of several years? You don't. The best way to find real estate syndication opportunities is to get out there and talk to people in the real estate syndication space. This community is quite small, and once you get connected, you'll easily be able to find sponsors in real estate syndication opportunities that fit within your investing goals. So how do private real estate syndications compare to real estate crowdfunding sites? Maybe one of your friends claims they invested in a syndication deal for just a few $1,000s. This is because recently, real estate crowdfunding sites like Realty Mogul, Realty Shares, and Fundrise have helped make it possible for millions of people to invest passively in real estate. Real estate crowdfunding sites can be a good place to find real estate syndication offerings. However, there are a few things you should keep in mind. First and foremost, these platforms require you to be an accredited investor in order to invest in their real estate syndication offerings. Some of these platforms do offer REITs, real estate investment trust, as an alternative for non-accredited investors. Typically, you can invest in these REITs with a low minimum investment. You can invest in Fundrise's REIT for just $500. Just be aware that REITs are not real estate syndications. Rather, they're a fund, which is likely what your friend actually invested in. When you invest in a REIT, you're investing in a company that buys real estate. You don't have to directly own the underlying asset, like in a real estate syndication. You would likely still get good returns. You'd be investing in a bunch of assets rather than a single one, and you wouldn't get the same tax benefits as with a real estate syndication. Regardless, if you're just starting out, you should definitely check out some of the real estate crowdfunding sites to see what they're all about. In conclusion, all in all, it's important to understand the risks, the terminology, the options available, and how to find the best deal that fits your goals and investing style. Real estate syndications aren't for everyone, but they can be a fabulous addition to anyone's portfolio. And now that you know more about how to find a passively invested real estate deal, that's one more checkbox checked and one less barrier for you to enter. At this point, what are you waiting for?